Good morning, everyone. My name is Allison DeGuide, and I'm with the Illinois Restaurant Association. I'd like to thank you for joining today's webinar, Workers' Comp and Beyond, Insurance Insights for Restaurants. Today's webinar is being broadcast in English, Spanish, and Mandarin Chinese. To listen in Spanish or Chinese, please use the interpretation button in your toolbar. This webinar is being presented by the Illinois Restaurant Association in partnership with the Cook County Small Business Source. Established to ensure businesses emerge from COVID-19 intact and positioned for growth, the Small Business Source connects small business owners with expert guidance and support. Services include no-cost business advising, resources, and events that connect small business owners with a community of advisors. For one-on-one business advising, sign up at cookcountysmallbiz.org. It's free and easy to sign up. Also, before we begin, I'd like everyone attending to know that the Illinois Restaurant Association remains a resource to you. We send regular email updates with what you need to know, and you can sign up for those on our website. For today's webinar, you can use the Q&A button to post your questions at any time during the presentation, and we'll do a Q&A session at the end. At this time, I'd like to introduce our panelists, Barry Brooks and Justin Langley, account executives at One Digital. Barry and Justin, feel free to take it away.
Great. Justin, you want to pull up the slides? You're on mute.
Can we see that all right? That's not in presentation mode, is it?
You hit the little presentation button up in the top.
Good.
Perfect.
Awesome. All right. Well, I appreciate the introduction. We're excited to be here today to share a little bit about who we are and some market updates of what to expect from changes that we've seen recently in insurance with regard to restaurants and operators. And just really what to expect from a broker that will provide best quality experience for you and your business. So kind of start out with who One Digital is. We were founded in 2000. This 100 billion assets under management is actually up to about 108 billion now. So over 100,000 employers that we're working with. And it's not just the P&C side of things. Barry and I are predominantly the property and casualty members of the team, but we do a plethora of things on our team with employee benefits, wealth management, retirement. We actually do individual insurance as well. So it's kind of in that One Digital name, a one-stop shop for you for all of your insurance and financial needs. So yeah, I guess I will let Barry take it away with our first few talking points.
Great. Hi, everybody. So today I just wanted to go over a few topics. One I think is an interest is workers' compensation and how premiums will be affected by the elimination of the tip credit. And then we're going to go over avoiding additional premiums after your audit. And then I wanted to look at coverages that I often see restaurant operators come to us that they're lacking, that I think leaves them exposed to liability and coverages you might want to look into buying and talking to your broker about. And then common issues with some of the more popular restaurant insurers. Usually these things are avoidable, but their basic policies might exclude things you aren't aware of that we should talk about. If you want to go to the next slide, Justin. So this is pretty straightforward, but it's something that I'm finding a lot of my clients had not considered, which is that your workers' comp is rated and priced based on the payroll that you report. And so, for example here, if you report $1 million in payroll to the carrier and you pay a 72-cent rate on that, your premium will be $7,200. It's that straightforward. There's some plus and minuses for credits and modifications, but they're very minimal. It's basically just that. And so as your minimum wage goes up with the elimination of this tip credit, your payroll that you report to the carrier is going to rise, and then your premiums are going to rise. And so the tip credit elimination is going to make your workers' comp more expensive. And it's something that I think a lot of people hadn't thought about in the past. And this ties in pretty well to the next slide, which Justin can move to, which is that, as many of you are probably aware, your workers' comp carrier audits you at the end of every term. They check how much you paid in payroll. And if you paid more in payroll than you reported, you owe an additional premium. Now, vice versa, if you paid less, you owe less, but unfortunately, we don't see that happen nearly as often. There are ways to avoid this, and one of them that I think is going to be an issue with this tip credit elimination is that as the payroll increases, if you don't meet with your broker prior to the renewal, these policies often just renew with the most recently reported payroll, and you could end up getting hit with a really large increase because you didn't report the increase in your payroll based on the elimination of the tip credit. The best way to avoid that is to meet with your broker, or, and this is something that I do think a lot of restaurant carriers utilize, but many of you might not be aware of, your payroll provider can partner up with your workers' comp carrier, and they'll report the payrolls directly to them, and you can pay your monthly workers' comp premium, which fluctuates with the payroll that your payroll provider is reporting, and you don't have to worry about the audit at the end of the year, and you don't have to worry about surprise audit premiums. Restaurant carriers, more than a lot of our other clients, seem to utilize that, but it's something that's worth bringing to your attention if it's not something you're aware of. Whether you have Paycor or Paychex or ADP or whichever one, most of them have this service. And so it's something to look into if you have ended up with these surprise audit premiums at the end of the year. Justin, if you want to go to the next one. I think Justin's going to talk here briefly about just how cheaper insurance is not always the best option. Just because it's cheaper, it can often be more expensive. So Justin's going to go into that.
Yeah, thanks, Barry. I mean, it's no secret that within the restaurant industry, we do see some pretty thin margins at times, and obviously, you want to be mindful of operating costs. So it lends to the idea that, I need to make sure that my insurance policy is as competitive as possible. But the idea behind the cheapest possible policy and the best value for you often isn't that big of a difference. So we talk about a lot of, perceived cost of coverage. So you'll see on this slide, there's a few different pieces that, you may be familiar with, you may not be familiar with. That's kind of why we're touching on it. But it may seem like adding all of these different coverages is just gonna balloon the policy premium, but oftentimes it's pennies on the dollar. It's something that could provide a ton of financial value to you and protection to you and your business in the event that you need to use them. And unfortunately, more and more, we're seeing these as common claims that are coming up, especially with restaurants. So just being mindful of, I just want the cheapest policy is it's a little bit of a dangerous mindset to have. And honestly, just having a little bit more of an in-depth conversation with your broker about, what coverages do I have? What limitations do I have? Is there anything where we can supplement based on my unique exposures? And Barry's going to touch on those.
Yeah, thanks, Justin. So, sorry. So the first one I wanted to talk about is employment practices liability. This is one that most restaurant operators do have. It's usually packaged into your very basic business insurance policy. But the difference between it is, so typically when it's included in the business insurance policy, you have what's called first-party EPLI. And typically third-party EPLI is excluded. And the difference here is that first-party EPLI covers you against employees suing you for things like harassment and discrimination, which is important coverage to have. And like I mentioned, it is usually included. But third-party EPLI is excluded on the basic policy, and that covers you for the same types of claims brought by customers against employees or you. And so these business insurance policies that get thrown together are not tailored for restaurants. And third-party EPLI is pretty important for customer-facing operations like restaurants. Because if your employee who you don't have control over says something offensive or causes some issue to a customer and they sue, you can be left exposed here to that lawsuit with absolutely zero coverage because you don't have that third-party liability. A lot of times you can add this for pretty minimal cost, or you can go get a standalone EPLI policy, also typically like $1,000, and it gives you $1 million in coverage. And we see these claims come often and find operators are surprised that they don't have this coverage. So something I wanted to touch on here today. The second is similar, which is crime policies. It's another thing that is often included in your standard business policy, but usually with a really, really low limit, like $10,000, $15,000, something of the sort. You can get a standalone, or you can increase those again for like very reasonable costs. Another thing that I find restaurant operators coming to me with is that they've had a claim for employee dishonesty and had a very low, nearly useless limit. We see these a lot. I actually looked it up. The statistics are about 90% of large thefts from restaurants are employee theft. They usually take months, if not years, to determine are happening, and they can hit really high numbers before you realize it's occurred, and you can be left hanging if you don't have. And so that's an example of cheaper insurance can be very costly, where you've saved money on the premium in the amount of hundreds or $1,000, and you lose out on tens of thousands because you didn't have that insurance coverage. The third point here is umbrella or excess liability. Another one that most restaurant operators do have, but you'd be surprised how often I have people come to me, or restaurant operators come and meet with us, and they don't have this policy. So as many of you probably know, you have typically on a standard business policy, a $2 million aggregate limit on your liability, or $1 million per claim. We hit these numbers more often than you might think, particularly in situations, God forbid, somebody dies on your property, either in a fire or they choke on the food or something that may not be necessarily your fault, but you can easily end up wrapped up in a lawsuit, and you can hit these numbers fast. An umbrella policy can be 1 million, 2 million, up to $5 or $10 million that sits above that $2 million limit and protects you. And it's pennies on the dollar. It's $300, $400 for $1 million extra. It can be $2,000 for $5 million extra, but they end up covering you heavily. I mean, you could end up in bankruptcy for not having this kind of policy. So I highly recommend talking to your broker about having an umbrella that sits over your GL if it's not something that you already have. And then lastly, this is the main topic here, which is that typically these, what they're called business owners policies or small business package policies, they're not tailored for restaurants. They're just made generally to cover businesses. And so you need to talk to your broker and make sure they understand all of the things that you're doing that are specific to your restaurant operation. One important one that we see people lacking often is what's called hired and non-owned auto. This covers you if you have employees driving deliveries in their own vehicles, or even if you don't do deliveries and you send your employee to pick up a package or do some sort of errand in their own vehicle. This is a very cheap coverage that provides the liability if they have an accident while doing work business, because the police are going to show up, they're going to ask what they were doing, they're going to say it was work related, and it's going to come back on you. And if you don't have this coverage, you could be in danger. Same with catering liability and festival operations. I see restaurants less on catering, but often on festivals where they go to the festival with a booth and they don't have on their insurance off-premises liability. So you want to make sure that you're communicating with your broker the things that you're doing and that you're covered at all times. Another one, and here's one that can save you money, is called seasonal exposures. This is very common in restaurants where, say, your restaurant has a patio or a large rooftop, or you're in Wrigleyville, so you're heavily dependent on the Cubs. Something where you make less money, or maybe you have less people, or you have less space operations during the winter months. You can communicate that to your carrier, and they can actually, you can pay less during those months because you have less exposure. So if you're rated on square footage and your rooftop's closed and your patio's closed, you have less square footage during those months. You can adjust your insurance so that you're paying more during the summer and less during the winter while you have less people on the property. And so that's another thing that you should communicate with your broker about if you have a business like that, and make sure that you're not paying your peak operational exposure all year round when you don't have to be. Justin, if you want to move on to the next one. And so here I wanted to touch on, there's a few very popular insurance carriers that do restaurants. You probably all use them. I don't want to specifically name carriers here, but they often have exclusions on their policies that you should be aware of. One that's being added recently, very commonly, is an exclusion for claims arising out of gunfire. this is pretty important. So on the property side, this just means if somebody fires a gun and breaks your window, that's not going to be covered. That might not be a huge deal. But on the liability side, that means that if somebody fired into your restaurant and your glass broke and someone cut themselves or was shot or shot on your property, you would be, the liability would be excluded here. So if you were sued for that, even if it's not your fault, you can still be brought into the lawsuit, you would not be covered. So it's worth, and there's a lot of things like this. There's a lot of exclusions that are worth reviewing. You should check with your broker, ask for a list of your exclusions and what they mean, and just make sure that you know where you're exposed, because these are pretty common. And a lot of times I find the operators are not aware of the exclusions on their policy, and then they get added, and they will inform your broker that these exclusions have been added. And it's not that common. It's not that often that brokers inform the operators. So you should just make sure you have a list of those and that you know what they are. And I think Justin's going to take the next spot here.
Yeah, I think obviously we live in a world where convenience is kind of king, and we want things to be handled easily and efficiently for us, and we deserve that too. But there's a reason that we use, or people have kind of shifted to use, the independent broker model. But all too often, it seems like you can shop the market, but oftentimes the policies are all wrapped up into one bundle with a single carrier. And that could be convenience sake. It could be the old adage of, bundle and save. Ultimately, within the restaurant market specifically, that's a bit of an antiquated way of thinking anymore, because we operate a lot on what we consider to be risk appetite. What carriers are comfortable with these risks? Are they going to be competitive if they want to write it as well? And there's been a lot of changes in the last 2 years in general and within, the insurance market. And, more and more we're seeing that if we carve out certain things, like in the little sentence here, your property coverage, and as opposed to your liability coverage, or individually with your liquor liability or your workers' compensation, we can write, or your broker, anybody can write these policies as monoline often, and it can save you a lot of money. I mean, having the same name on the sheet of paper isn't always going to be the best option for you, especially, coming back to the conversation of the margins within the operating expense of restaurants in general. This is important because it takes a little bit more work, roll up your sleeves, do a little bit more work for the client, but the value of the package and the ultimate product that you get can be of much higher quality, and just by placing it with the right carrier. So I guess the convenience question comes down to, is it more convenient for you, or is it more convenient for the broker? And I don't mean to make it subjective by any means, but just asking yourself that question, and being in contact consistently with your broker as well. Which kind of leads into the next slide here, if it will switch, of maybe what to expect on a yearly basis from your broker in terms of a service schedule. So a lot of times, at least what we've had brought to us, people will say, hey, I got my renewal very close to the renewal date. This premium seems much higher. I didn't have any claims. What happened? And there's a lot of just like distaste around maybe sometimes how things are handled, and just providing a service expectation of what you deserve and what your business deserves, to make sure that your time is used efficiently. You're busy. You have a lot of things going on. You have a lot of things to manage, and having a confidence that your insurance policies are going to provide for you in the way that you need. You'll see on here, there's a couple different touch points throughout the year. And I mean, 4 phone calls or, a couple meetings in person. I don't think that's too much to ask in terms of, making sure that your exposures are covered correctly and that you're not overpaying for what you need for your business anyway. So I would say that there's several benefits of this service structure. Having that best premium and product fit for your business, because the market does change, and it is changing, and it probably will change forever. Making sure that you're fit with the right carriers, It is a kind of a cyclical nature of ebbs and flows of how competitive we see different products being. But also, you know, if we give you or your broker gives you a call mid-year, it's like, hey, you know, have you experienced seasonality in terms of your payroll, in terms of your employee count? You know, this is what your expected business revenue is for the year. Are we at about 50% of that? It's like, is it higher? Is it lower? Coming back to that audit conversation. It just is a lot of transparency of information and having you represented the correct way. Another big piece, and this kind of comes back to the exclusions discussion that Barry had touched on earlier, is, you know, it's just an education piece. You know, what can my policies do for me? What are their limitations? What's not going to be covered? Is there any way to supplement that? And just understanding what you're paying for and what you're getting in return, because you work hard for your business, and transparency of information is king in today's day and age. And you know, if nothing else, honestly, proper service schedules avoid surprises for you. Like I mentioned earlier on, you don't get hit with that renewal where it's like, oh my goodness, I didn't know that this was going to be increasing this much. Gives you an opportunity to pivot off of that product if there is a better option there for you, or if there's changes in the market. So there's a lot of value in just having a few touch points scheduled with your broker throughout the year. It protects you better. It will ultimately likely save you money in the long run as well. And you know, if there's any questions that you have, they're not just left lingering. So I believe that is just about all we have for you all today. Obviously, you know, this is a little bit of a inward facing conversation. We have things that we've seen in the market that we thought may be pertinent to address with you all today. If there's any questions that you guys have that you don't want to ask in a group setting, obviously our contact information is here for you, but I guess we can open the floor to any questions.
Thank you so much. We have a few questions. I'm not sure if they're exactly related to the presentation, but I'll go ahead and ask them, and maybe you can get an answer. If not, that's fine. The first one is, do you need to pay out unused vacation to employees who leave your company?
Muted.
Yeah, that's not really an insurance question. That's a legal question. Believe the answer is yes, but that's not my area of expertise.
Thanks for that. Yeah, I'm gonna go ahead. I think the other two questions are also related, less to insurance and more to just legal questions. So I think we can go ahead and skip over them, and then we can reach out to those people directly. So I'd like to thank everyone who attended. I'd like to thank Barry and Justin with One Digital for the presentation. Super concise and super helpful, and great info on the tip credit. I hadn't even considered that either. I'd like to thank the Cook County Small Business Source for their continued support. And then after this webinar, attendees will receive an email with links to the webinar recording and presentation. So thanks everybody, and have a great day.
Thanks everybody. Have a good one.